Wow. So this Adani Power earnings report is quite the document, isn't it? It's like reading a novel, but instead of drama, we get debentures and deferred taxes.
Absolutely. I mean, it's packed with information, almost feels like we need a power plant just to process it all. But let's dive in and make sense of this financial roller coaster, shall we?
Okay, so first things first, can you give me the lowdown on Adani Power? Like what do they actually do?
Right. Well, at its core, Adani Power is a major player in the Indian thermal power generation space. They basically operate a bunch of power plants across several states using mostly coal as their fuel source, kind of like a big engine for the country's electricity grid.
Okay, so they're all about generating electricity. That makes sense. And it says here they have a bunch of subsidiaries. Any notable ones?
Yeah, quite a few actually. There's Adani Power Jharkhand Limited, Pench Thermal Energy, and several others, including some recent acquisitions like Korba Power Limited. They've been busy expanding their reach through subsidiaries. It's like a power generating empire.
So they're definitely growing. Now, let's get into the financials, the nitty-gritty stuff. What about their income statement? What's the story there?
Okay, so for the 9 months ended December 31st, 2024, Adani Power reported a total income of about 44,370 crore rupees. That's a lot of rupees. I mean, wow. Their revenue from operations was around 42,000 crore rupees, which shows they're selling a lot of power.
Impressive. And what about their profit? Is all that revenue translating into actual money in the bank?
Well, their net profit for the same period was around 10,150 crore rupees. That's definitely a big number, but it's actually less than the same period last year where they had a net profit of over 18,000 crore rupees. So there is that drop there.
Interesting. So revenue is up, but profit is down. How is that even possible?
Actually, if you dig a little deeper, you'll see that a big reason for that profit decrease was a significant drop in other income. Last year, they had this massive other income of 9,412 crore rupees, whereas this year it's only 2,404 crore rupees. It seems they had some large one-time gains the previous year.
That makes sense, Isaac. When you have that one really good garage sale and then you try to replicate it the next year. Right. So, what about their earnings per share? That seems like something investors would care about, right?
Absolutely. For the 9 months ended December 2024, their basic EPS was about 25.70 rupees per share, which is, well, significantly down from the 44.99 rupees per share they had last year, again due to that big drop in other income.
Okay, so that's definitely something investors are going to be looking at. So that's the income statement. What about the balance sheet? Are they managing their assets and liabilities well?
Good question. Their total assets are around 1,12,370 crore rupees, which is primarily made up of their power plants and related infrastructure. Total liabilities are about 51,888 crore rupees, which is a bit of a concern if you look at their debt levels.
So a lot of assets, but also a lot of liabilities. Is there a chance they might have trouble paying off all their debts?
Well, they've got significant debt, that's for sure. But, they've also been actively raising funds through non-convertible debentures and equity shares, which should help them manage their debt obligations. They're kind of juggling.
Okay. It's a bit of a tightrope walk, it seems like. So let's talk about cash flow now. Are they generating enough cash to keep the lights on, so to speak?
Right. Well, the cash flow statement is actually not directly included in this report, but we can infer some things from the other statements. They've got high operating revenues, which typically translate to positive cash flow, but their investments and debt payments also consume a lot of cash.
So it's like they're bringing in money, but they're also spending a lot. It kind of sounds like a lot of companies, actually.
Exactly. And it seems that they're also looking at raising more funds. It seems like a common theme here.
Right. Now, let's get to those key financial ratios, the ones that tell us the real story. Are there any particular ratios that stand out?
Well, we don't have the complete picture to calculate all the ratios precisely, but looking at the data, we can say that their profitability ratios, like net profit margin, have decreased compared to the previous year.
Oh, okay, that goes along with the lower net income. And what about liquidity ratios? Are they in a good spot to cover their short-term obligations?
Well, the balance sheet shows that the current liabilities are substantial. Without more details on current assets, it's hard to give a precise view, but they seem to be relying on continuous revenue generation and fundraising to maintain liquidity. It's like living paycheck to paycheck, but on a corporate level.
So it's something to keep an eye on. Now, what about debt ratios? How leveraged are they?
Right. Well, we know they have a significant amount of debt, and the fact that they are increasing their non-convertible debentures from 5,000 crore rupees to 11,000 crore rupees suggests they are leaning heavily on borrowed funds to fuel growth. So yes, they are quite leveraged.
Okay, that's definitely a risky strategy, but it seems to be common in the power sector. So they're raising funds, they're acquiring other companies. What about the trends? How have they been doing recently?
Well, over the last few quarters, their revenue has shown a general uptrend, mainly because of higher power sales. Their costs have increased as well, particularly on fuel, but their profit margins have kind of varied based on one-time income and market conditions.
Okay, so it's a mixed bag, and it seems like some of their profits are subject to adjustments based on regulatory orders. It's like a never-ending negotiation.
Exactly. It's like they are in a constant tug of war with regulators and discoms over payments and compensations. It's not very smooth sailing,
You got it. Now, what about how they are doing compared to their competitors or industry benchmarks? Do we have enough information?
Well, while this report doesn't directly compare them to competitors, we know that the power sector in India is very competitive. Adani Power needs to maintain operational efficiency to stay ahead of the pack. It's like a race, and the other runners are catching up.
Right, it's a battle to stay on top, for sure. So, based on all of this, what's your outlook on Adani Power's future? Is there any catalyst for growth?
Well, their capacity expansion plans, especially the new thermal power projects, are significant catalysts for growth. They are also looking to improve competitiveness through backward integration into mining, which might help reduce costs over time.
Okay, so expansion and cost management are key. But what are the potential risks?
There are a few regulatory challenges, fluctuations in coal prices, and the high level of debt are definite risks. Also, those pending investigations by SEBI and a US DOJ indictment of a non-executive director do add some uncertainty.
Okay, so it's a bit of a mixed bag of opportunities and risks. Any other surprises or aha moments you had while reading through this report?
Actually, the sheer number of ongoing disputes and claims with various regulatory bodies and discoms, it's almost like a full-time job just managing these legal tangles.
Right? It's like a never ending series of battles. Now, if you had to give some key takeaways to investors from all of this, what would they be?
Well, firstly, Adani Power is a major player in the Indian power sector with significant expansion plans. So there is that growth potential. However, investors should be mindful of the high debt levels, regulatory risks, and ongoing investigations. Disclaimer, we advise investors to check with certified experts before taking any investment decisions.
Solid points. So it's a bit of a high risk, high reward situation, kind of like trying to tame a wild animal. Okay, so let's recap. Adani Power, big thermal power player in India. Significant revenue, but profits were down. Lots of debt, expanding capacity, and some regulatory hurdles to jump over. That about sum it up?
Exactly. They're definitely a dynamic company in a complex sector. It's like trying to predict the weather, It can change quickly.
Well, I feel like we've covered a lot. And before we sign off, it would be amazing if you all could take a second to hit that like button and subscribe to our YouTube channel. It would help us out tremendously.
Right. Yeah. Give us a like and subscribe. Thanks. And so to wrap it up, any final thoughts or any other questions that this report leaves you with?
Well, I'm wondering, how will these new acquisitions like Korba Power and Coastal Energen perform in the long run? And how will the company be able to manage this massive amount of debt that they are piling up?
Great question. Yeah, only time will tell how those acquisitions will really play out and if the debt levels will actually become manageable. It definitely adds an element of uncertainty, and it also adds a lot of material that we have to dig into.
Well, there's always more to uncover, I guess. Thanks so much for breaking down all of this information. You made it much easier to understand,
Absolutely. Happy to help. It's always fun to try and unravel these financial mysteries, Until next time.